Hey everybody, today is July 26, 2025, and today we're going to talk about the stock market and where it says stock market head for the month of August. Before we begin, please read the disclaimer and you can pause the video as you read it. Okay, so where we left off last time was around late June, right? And I basically said that I was bullish on the market, right? We basically had this incredible V recovery after plunging, right, with the Trump tariffs and the geopolitical risks with the Middle East and of the DeepSeek stuff back in February. We pretty much made a full recovery. So it's pretty incredible. We're pretty much hitting price discovery, new all-time highs. Everything looks really good, right? And my prediction last month was basically that we would continue price discovery. That was super bullish. And so the question is, are we getting a little overextended now, right? The RSI for the daily is starting to hit the overbought part. So the question is this, are we going to see a pullback, right? So obviously, you know that if you've been watching this, you know that I'm pretty fond of Fibonacci levels, right? Fibonacci's are these lines, and I really like them because they tend to act as strong support and resistance levels. So obviously, we're getting close to the next area of resistance, right? Which is around 640. Let's see. Yeah, that'd be like 6,400, right? Yeah, 6,400. Look at the weekly chart. Still looks all right. We're still not necessarily overbought yet, but we're getting close there, right? Yeah, the monthly chart is where I'm a little bit more apprehensive because we are up 3 months in a row. Now we had this nice bullish reversal candle here. You can see, look how big this wick is, right? This is a lot of buy support coming in right after the plunge down, right? This is the Trump tariffs, right? But we follow that up with 3 months of up, right? So usually when we have this many green candles, it's usually healthy to have a pullback at least, right? But in terms of like the V recovery, this is usually a very bullish sign that will continue high, right? The last time we had it was during, really it was during COVID, right? Now COVID's pullback was much more intense. This correction was much more intense, right? Because it basically plunged through all supporting the 200-week moving average, right? Whereas this one, we still stay above 200 weeks. But usually when we recover, we basically saw it continue up higher, right? So the question is this going to continue up higher, right? So let's look at the inflation data, right? Last week, I mean, not last week. The last video last month, we basically said that we saw one data point where it went up a little bit, but it wasn't too bad because this whole year we've been going down with this is the inflation rate, CPI inflation rate, right? We've been coming down roughly 3 months in a row, right? Then we saw a little bit of a push, a bounce, which I said wasn't necessarily a bad thing because when we have these downtrends, it's healthy to see a bounce, right? This is last year. We went down, then we saw a little bounce. Sorry, it's right here, right? So we went down and we saw a little bounce and then we went down again, right? So I said that, if we go down, we see a little bounce, maybe it comes down again. Unfortunately, the latest inflation rate data, it went up again. So now we're up 2 months in a row. So this puts the Fed in an awkward position because Trump wants to see a Fed cut, right? We haven't had a Fed cut, a rate cut, right, this year, right? We had rate pauses, but Trump wants a rate cut because that's going to be positive for the market, right? But Jerome Powell is very adamant that he wants to see inflation come down towards the 2%. And the fact that it's up, and they sort of had this awkward meeting recently. And so the Fed meeting is going to be, I think sometime next week, or actually in a couple of days, actually. Yes, July 26th. Yes. In a couple of days, they're going to announce. So unfortunately, this video is going to come out before then, but they're probably going to pause, right? I don't think they're going to raise the rates. But I don't think they're going to cut at this point. I mean, the fact that inflation went up too much, I'd be surprised. Obviously Trump is putting a lot of pressure on Jerome, but Jerome definitely is not somebody who's going to kowtow to Trump. Many times he's talked back and he's stood his own ground. So I don't think that he's going to be the one who's going to cut rates. So I think they're most likely they're going to pause, right? But this is not necessarily, okay, so one of the headwinds I've been talking about is a potential recession risk, right? And we haven't had an official recession since COVID, right? And so this is a 2-year, 10-year, right? Whenever it goes below zero, it's considered inverted, right? And every time it recovers above zero and it becomes uninverted, it's usually followed by a recession, right? It might take some time, but it's usually followed by a recession, just going all the way back to 1980s, right? And so for now, we've been uninverted since 2024. We haven't had an official recession yet, but this might be coming up soon, right? Because we're starting to see inflation tick up again. The Fed is probably not going to cut rates, and the market is ripping up to new all-time highs, right? But who knows how long this could last, right? Another thing is if the Fed does eventually cut rates, that usually is preceded especially if there's a lot of pressure, right? If Trump is putting too much pressure and Jerome eventually throws in a towel and says, okay, fine, I'll cut rates. Well, after elevated periods historically, all the way back to like even the 50s, right? Whenever we've seen the Fed cut the rates after an elevated period of time of high rates, this is usually followed by a recession, which is a gray area, right? The last time, again, we had was during 2020, we had to cut for the COVID lockdowns, right? So if Jerome does feel like he needs to cut rates, that and the yield curve uninverting and inflation rising, we might actually see a recession sometime, either late this year or next year. That's just something to think about. But the tailwinds, everything looks pretty good for now, right? This is obviously driven a lot by the NASDAQ, right? Tech stocks are doing very well. NVIDIA just recovered to new all-time highs. And everything, the Middle East war hopefully is coming down. The tensions are coming down, right? They're saying that Israel and Gaza are going to have and Iran are going to have a ceasefire deal. So if that happens, then obviously that's going to be great. But again, from a technical standpoint, we aren't necessarily overbought yet, but just getting close to it, right? Right. Notice how the RSI can hit overbought daily, but continue higher, right? So over here, it hit overbought, but it still continued higher, right? So just because it hits this level doesn't necessarily mean it's going to pull back. But I do think that hitting this Fibonacci area might be a level of resistance. So I do think things will slow down a little bit, and we might consolidate for the next month. And also, if you look here, right, like I said, we're up 3 months in a row for the S&P. I do think that having one red month, maybe one choppy red month, is not necessarily the bad thing. It might be healthy for the uptrend to potentially continue. Let's look at the VIX, right? The VIX, right, it looks pretty like it's been a downtrend since basically the tariff, right, peak. So it's getting close. It's not oversold yet, but it's getting close to that. And usually when we're down this much, and we can look at the weekly, I mean, look, it's just plunging straight down, right? Same thing, the month is down 3 months in a row, right? The VIX is down 3 months in a row. Usually when it's down, there's usually at least a bounce. And that bounce could translate to a market pullback, right? So, but it's not like anything that's like so adamant, like it's not like super oversold or anything like that. Excuse me. So that's sort of the challenge is like at a certain point, like there probably will be a bounce, but when, right? That's the timing part of it. So gold has been looking pretty good. Last time I said we were in this ascending triangle that's chopping around. If it can stay above the Fibonacci support area or resistance area, they're gonna flip it to support and push up higher, right? Now it is up pretty much every month, and we are starting to see these rejection wicks, but if we can push up higher, then potentially, right? But it is, again, look at this, 85, 86 on a monthly. It's very, very overbought right now. But like I said, if they're able to chop through and eat up all the supply, this can go up higher, right? Dollar index, last thing we'll look at. I've been saying many times that this has been down for a couple months. Like this was down 5 months in a row, chopping below the 100-day moving. So it's a 100-month moving average, right? And so we're sort of overdue for a bounce, right? So if there is a bounce temporarily, this can coincide with the VIX spiking, which can coincide with the S&P pulling back a little bit, right? And having our red month. So ultimately, even though I'm bullish on the market going forward, I am, still looking out for potential headwinds with a recession risk looming, and also just short-term resistance around this area. 6,400, VIX looks like it might do a short-term bounce. Dollar also might see a short-term bounce. But ultimately, I am long-term bullish on the market. I do think that this continues to be fundamentally driven by good stocks like tech stocks and the blossoming AI, industry. So ultimately bullish, but expecting a little consolidation this next month. I wouldn't be surprised if we have finally a red month after 3 straight months of green, but we'll see, and we'll have to look at and see how the inflation data comes out, and also the Fed meeting next week, which we'll discuss in the next video, of course. But we want to see inflation come down, right? We don't want to see this bounce to continue higher to closer to 3, because then that would be counterproductive. We spent all this time trying to get the interest rate down to closer to 2%, and to see it bounce back up to 3 would just be kind of disappointing, right? So, but we're going to have to take it day by day, and we'll see you in the next video. Thank you for watching this video. If you found it helpful, useful, or informative, please like this video, leave a comment below, subscribe for updates. Appreciate all your support. Thank you again, and have a great day.